morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. The big news first, and not too much. Well, actually, if you look at the unofficial reportage, there is a string of positive developments on the Russia-Ukraine front, but this is official stuff, right? So, White House has said that Russia could launch a chemical attack on Ukraine. Well, last night, unfortunately, or yesterday, a maternity hospital was also shelled. I mean, these are terrible news on the war front. And then and the heart goes out. From an economic front and from a market's perspective, though, yesterday and today have not been too bad. Overnight, oil has dropped over 12% actually for the worst day since November. And in terms of other news, a lot of Indians are invested in global stocks like Amazon. So there's a stock split there, 20 for 1, a buyback of up to $10 billion of shares. And in aftermarket hours, the stock price of Amazon is up about 9-10%. So that's essentially what's happened on the global front. Keep in mind, if a truce of some sort gets reached because there was an economic corridor opened, which led to the fall in the price of crude, uh, then if the round of negotiations yields some results, then that could be viewed constructively by the world markets as well. In fact, the world markets did okay. US had a really good day. I think, if I'm not wrong, the headline read that the S&P 500 has had the best day since 2020, and that tells you a story of how strong the bounce back was. Of course, it's still sub 10%, so it's still in the correction territory, and there was a long way to go. But the US markets did well in yesterday's session. Asia and SGX Nifty 2 should be showing some gains. Remember, the US futures are fairly muted. So the SGX Nifty 2 is not really gung-ho, but it is in the green. The rest of the Asian screen is really packing a serious punch. Maybe I'm mistaken about the SGX Nifty, by the way. The website shows the last minute. I mean, I just saw about a minute ago. It showed the gains, yeah, which were not close to the 300-point gains that it is showing right now. So at times there's a bit of a trick there, but there's gains to be taken today. It will be a gap up start. That's the middle point I'm making. Now, I'm just glad, viewers, that the last 2 days we were talking about how the quant indicators seem to be indicating that there is an upside, and I think they got proven to be right. I'm so happy for that. Now, the sharp bounce back, I think, will continue today. My guess is that banks may finally participate. And why do I say this? Because remember, the day before yesterday, we were talking about that until the FI selling continues, it's difficult for banks to outperform. That's what happened yesterday. The markets did what they did. Reliance Industries was up 5%. But if you just pull up, we'll come back to the trade setup. But if you can pull up the Nifty MRR and show what happened in trade yesterday, that's a function on the terminal, which shows what was the one-day gain for the Nifty, which was about 2%, and what participated and what did not. So Asian Paints participated, Reliance participated, Bajaj Finance, NBFC that ever participated, Mahindra and Mahindra participated, but a lot of others did not. And I mean, frankly, if you look at the top 10 list, usually you would be spoiled to believe that the likes of ICICI Bank and some of the others would come back and be back with the bank. That isn't happening. Yes, there was IndusInd Bank and HDFC, and therefore the bank Nifty also did reasonably okay. But a lot of participants were conspicuous by their absence. That's the problem, really. So will that continue today, or will some of the banks come and participate? That's the key question. So for 2 days on a trot now, we were oil down, commodities down, and banks up. Will that trend continue today? On open, it certainly will. The question is, would you want to participate after the gap up? I suspect in case of select banks, you might well want to do that. But the other question also is that why is it that some stocks like ICICI Bank are not participating? Because there is continuous selling out there. The oil upstream, I think, faces some tactical downside today with the sharp fall in crude prices. So do watch out for that. And conversely, watch out for all the stocks that benefit because of a lower crude price fall. Paints, banks, economy opening up themes in the very short term are the things to bank on. Keep in mind today, depending on what the election verdict is, but based on the exit polls, it seems like the incumbent government will stay in power. That will add a little bit of flavor on the upside to the equity markets. Of course, if it doesn't come out that way, because you never say never in politics, then that could kind of spoil the party as well. But I'll keenly watch out for the UP election verdict too. FIs continue to sell 4,818 crores, and that's the point. That's where I believe banks might have some bit of pressure. By the way, just these 9 days of March, viewers, the outflows are more than the entire set of outflows in Jan and Feb. Over $10 billion of FI outflows, YTD, and we did not even finished Holi. And That's the kind of selling that we've seen. At some point of time, it will stop. Yesterday, we were talking to the global head of research of William O'Neill, and he said that until crude prices reverse, this won't happen. Now, crude prices have reversed a little bit. If they reverse more, could that be viewed positively? Could that lead to inflows? Could that lead to banks performing? That's the question. Anyways, so what are the stocks to monitor today? We first start with the MS view on India. They came out with a note late last night. It's the strategy note from Ritam Desai and team, and I think it gives an indication of how they are thinking about stocks and sectors. So they are saying that low correlations across stock signals a market driven by macro, in contrast to stock picking, which warrants a wider sector position within cyclicals and rate sensitives. And within that pocket, they are overweight financials, consumer discretionary and industrials, and are underweight utilities, which is down from overweight, energy and materials. The underweight has been increased. The energy underweight might be primarily because of the fact that these stocks have run up a little bit, and tactically there could be some downsides here. In defensives, Rhythm and team double upgrade technology and go underweight consumer staples and stay underweight healthcare. Double upgrade technology, viewers. Keep that in mind. The rupee depreciation, as I said, is a net business positive. It may not result in tactical positives, and they don't matter, but it's a business positive for Indian IT. And given the broad market correction, this is the other important piece. Given the broad market correction, they are size agnostic versus their previous preference for large caps. That's a big statement too. Hitherto, everybody's been saying hide in large caps. That's the pocket to be in. There are a couple of other people who have come in and say this, but Morgan Stanley's come out and said that they are size agnostic now. Large cap, mid cap, small cap, it doesn't matter to them. Quite stunning, really, simply because of the kind of correction that has happened into some of these stocks. So watch out for some of these pockets individually in technology could be interesting. The MOV function will give us a sense of what did well last night. Remember, I showed you the Nifty, but this is the broader market FT 500, right? So just look at the kind of gains. Some of the spec chem names, right? Anupam Rasayan, for example, was up about 11%. Jubilant Ingravia was up about 10%. So some of those have done really well. There was strength in beaten down financial names like Indiabulls Housing Finance, TV18 Broadcast, and some of the media names too, by the way. A bunch of these media names did really well in trade yesterday. You had names like Indian Hotels, so the reopening theme that I was talking about, which did well. And on the flip side, for individual reasons, Bajaj Electricals didn't do well. Coforge, again, because of the deal at launch day, somebody had a whiff of it, and that stock was down about 5%. The likes of Shree Cement and some of the others corrected quite a bit. Nazara corrected quite severely. So those are the few names that didn't do well. You now kind of know the stance of the market in this bounce back. What else could do well? Keep in mind, Reliance was up 5%. Singapore GRMs have surged quite dramatically. Automakers in Japan have surged today, and therefore auto could be a space in focus. Showa Denko is up 10%, so graphite electrode companies could be in focus. So all of these are things that you should keep in mind. Coforge, media sources such as that promoter bearing PE will sell stake in the company today via up to about 1,500 to 2,000 crores. And apparently JP Morgan and IFL are said to be the brokers. This is as per media sources. We at BloombergQuint don't have individual confirmation of this deal happening. But yeah, if Coforge starts lower, then you know why this is happening. Consequently, also keep in mind, or rather conversely, keep in mind that it corrected 5% yesterday. If it starts off gap down again today, and people are lapping up technology shares or looking to lap up technology shares, if a successful fund selling happens, then the stock may bounce back too. So keep that in mind. If you're not in the trade already, you want to be quite careful about it. J. Kumar Infra Projects, the company's bagged two orders, a work order from Pune Municipal Corporation worth 604 crores and from Delhi Metro Rail Corporation worth 1426 crores. So 2,000 crores, not very large, but reasonably large. So could be a positive. PNB Housing Finance, by the way, has approved raising of funds via rights issue, so keep that in mind. Stuffcraft, SCA Growth Investments sold about 7.75 lakh shares at 645. Why I bring this is because it seems that the PE selling is now close to getting over in Stuffcraft. The stock was up yesterday as well. It's corrected quite a bit already. It was up yesterday, could be active today, so watch out for that one. Dwarikesh Sugars was up about 17%, and which is why I thought I'll bring this to you, that EAM Emerging Market Small Cap Fund LP bought about 16 lakh shares at 116. Viewers, there's something out there, right? Sugar was rock solid all through this corrective moves as well. If you just look at any of the sugar names, and Virat, maybe we can get Dwarikesh chart if we can, show a 10-day chart or a 10-day chart for Triveni or a Balrampur or any of the others, and you will see that the last 10-15 days, while a lot of other stocks have corrected, the sugar stocks were rock solid. They did not crack at all in this correction. And yesterday, when we were talking to the William O'Neill, head of research, they manage charts and fundamentals, and they said that somehow the prospects for Balrampur Chini, for example, look really solid. So um, everybody's looking at this space, and the space is outperforming compared to a lot of other mid cap and small cap pockets. So yeah, this is Dwarikesh Sugar, and forget this last surge yesterday, but just look at the last 10 days, right? Since 24th Feb, when the conflict first started, the stocks have actually moved higher. There is gains in sugar pricing, and therefore the sugar segment will also do well. Ethanol lends stability. It's a very interesting thing that's happening in sugar, and people are taking note of it, Indian sugar in particular. So watch out for some of these. Dwarikesh I simply brought simply because there's a large fund. I mean, there was a large move yesterday, 17%. And why? One of the small cap funds have also bought in the last day, 1%, close to 1%. Lastly, what stood out for me, viewers, was this statement from Future Lifestyle, and the story that is there on our website. You might want to read it to understand more about it. But the companies received termination notices on sublease properties from Reliance entities about Central stores and 78 brand factory stores. Now, we know over the last 15 days, Mukesh Ambani's Reliance Industries and Reliance Retail in particular have taken over a lot of these future brand stores. And there's this story on BloombergQuint. So if you're a subscriber, you can go in and try and read it. It shows how, and it speaks about how Reliance Industries has outfoxed Amazon in this deal. There is some deal that everybody needs to reach by the 15th of March. All the players, which is Future Group, Reliance Industries, and Amazon, and apparently Reliance Industries holds the trump card there. So it's a wonderful story. You might want to log in and read. It's done by our Bloomberg colleagues, PR Sanjay and Sarita. But if I want to go and read that story, it's on the front page. It's a very interesting anecdote or a mention of how Reliance played its cards in multiple ways in order to gain an edge in this process. But nevertheless, that's a corporate story. More importantly, from a market's perspective, crude down is a blessing for India. You might never know. Because of this, there could be a bit of an abatement of selling as well. So all of this is something that you should be watching out for. Yeah, this is the story I'm talking about. But in any case, so net viewers, from a market's perspective, crude down, positive. Watch out for banks. They haven't participated thus far in a meaningful way. Bank Nifty could be a great space to play. And in individual stocks, economy opening themes, crude beneficiaries, crude being downside, crude on the downside. So the companies that benefit, paint companies, tire companies, what have you, and automakers in particular, simply because Japan has seen a big surge in the prices of some of the automakers. So watch out for that. And Reliance is already rallied, but GRMs are really shooting up. Could be interesting to watch out for that one too. Thanks so much for tuning in. Have a safe, profitable day ahead.